to run workloads in a safe harness, and Snowflake will be that safe harness to let these AI workloads run in the enterprise.
How much duress is Salesforce in? Is it in the bucket of AI roadkill, Brent?
From an investor perspective, it is. You can look at the year-to-date numbers. You can look at the reaction. I think we're at our software conference down in Newport, and we had many CIOs present about the fear of applications getting impacted from AI. So horizontal apps and back office, front office, Salesforce unfortunately is in that category. The good thing for Salesforce is I think they had good numbers. They maintained the full year. The numbers weren't awful. They weren't the inflection we're seeing in the growth we're seeing in Snowflake, right? Snowflake grew backlog 38%, and Salesforce is growing, in the low teens. So you can see a difference in the application companies' growth rates. They're a lot lower. Infrastructure is a lot higher. So I think we're just saying keep it simple. Stay underweight software, stay overweight infrastructure, stay underweight the application category. I think Salesforce will figure out a way to bounce out of this. But right now they're kind of considered a name that's under duress because of many of these AI themes. And then if you look at the departures, there's been an incredible departure list from Salesforce. Denise Dresser going to OpenAI, who's an incredible leader. You've seen just a huge list. If you ask me what's the number one departure, it's been from Salesforce in terms of the number of executives turning over. And so I think Mark Benioff has to address this. Is when you look at that magnitude of turnover, we're not seeing that in infrastructure software.
It's already at that outside of that expected move for the time frame. So in a highly probable area here to maybe collect a little bit of premium, $1.65 against $3.25 loss in the trade.
Well, when I look at Ben's trade, the difference between my trade and his is I need movement, right? I'm paying theta. I need the stock to move, and in some cases I need it to move quite a bit, right? Ben answers the lifelong question, what happens if nothing happens? Ben's trade is profitable. It's a high probability short put vertical that gives you long deltas, but allows the stock to back off and this trade still to be profitable. As long as it stays above that short strike, this short put vertical is profitable. So you get to be wrong and profitable on Ben's trade. And in 3 of the 4 scenarios, upside, unchanged, or down very small, Ben's profitable. The only place he loses money is if it breaches that short vertical and heads, towards the long strike. So this is one that answers the question, do I make money if nothing happens? And the answer to Ben's question or Ben's spread is yes, it does.
All right, good stuff there. We've got the bull v. bear debate. Choose your own adventure. Thanks, guys, and thank you to Ben.
Because we're looking at these names that have been beaten down, that some of them are even calling them some value plays at this point. You talk about the complete 5 bottleneck non-Mag 7 AI basket. So tell me about the Mag 7 that we follow and this other AI basket that you're watching.
Yeah, I mean, I think it's pretty clear that the market is now thinking about AI as not just who is spending the most on it. It's starting to reward the companies that actually control the scarce inputs, the contract capacity, the data movement, the power infrastructure, like edge compute, all these like layers that make the entire AI economy function. So the easiest money in AI was obviously buying the most obvious bottlenecks early, but I do believe like eventually it's going to return back towards the normality of the next phase of the AI cycle where the market's going to start separating the real franchise value from temporary scarcity. But as of right now, I just think that the non-Mag 7 AI winners are going to continue being these like 5 bottlenecks. I'm talking memory obviously being the most obvious one after the Micron earnings. I think connectivity is also a really important one. That's data movement bottlenecks inside AI factories will only continue to get more importance. Power is going to be a really big physical constraint on how fast AI data centers can actually scale. Then also the compute capacity as the overflow layer when hyperscalers are sold out, which feels like it's going to be years before the supply and demand even out. And now the most recent one really is the on-device CPU. That's like the next leg the AI graduation where they're moving from the cloud only training into like inference, agents, PCs, phones. And that's why you're seeing Intel, AMD, and ARM just perform exceptionally well recently because of this CPU bottlenecks that's forming due to this inference breakout.
Okay, and just to clarify, do you like those 5 sectors, groups, memory, connectivity, power, CPUs? Do you like those, or they're names to watch, just quickly?
Yeah, I still like them. I think the bottleneck's going to last for years. I think it's been premature assigning a peak earnings on either of those bottlenecks. I think that we're seeing every 3 months we get soberly reminded that the bottlenecks continuing, supply is not even close to where the demand is. You just heard Micron talk about they have no visibility in line with when the supply and demand is going to line up, and that now they have customers signing these strategic customer agreements that are 5-year contracts that are making sure that they guarantee the minimum.
Why Nvidia long-term story may be stronger than the ever. While Micron dominated the headlines, Nvidia quietly received another major confirmation because every dollar flowing into the memory, power infrastructure, networking, and the data centers ultimately point back to the one company, and that is Nvidia. Nvidia isn't losing the AI race. One of the biggest conquerors among the investors today is competition. Amazon has Trainium, Google has TPUs, and Microsoft is designing custom AI chips. AMD continue improving its accelerator lineup, and even Qualcomm and Intel are expanding into the AI. At first glance, that sounds like a bad news for Nvidia, but many analysts argue the opposite. The AI market is expanding so rapidly that multiple winners can succeed simultaneously. This isn't winner take all the industry. It's an industry where demand is growing faster than the supply. Market share isn't everything. Imagine Nvidia market share fall from 90% to 70%. Many investors immediately view that as negative. But what if the total AI infrastructure market becomes 5 times larger? Even with a smaller percentage, Nvidia could still generate sustainably more revenue than it does today. That's why professional investors increase focus on the size of the market, not just Nvidia's share of it. AI spending is becoming essential. A few years ago, artificial intelligence was viewed as experimental. Today, it's becoming a mission critical. Companies are no longer asking, should we invest in AI? They are asking, how quickly can we deploy it? That shift completely changed the infrastructure landscape. Instead of optional spending, AI infrastructure is becoming strategic necessity. The infrastructure build out is far from finished. Building an AI data center isn't like installing a new software. It's required thousands of GPUs, advanced networking, massive amount of high bandwidth memory, liquid cooling system, reliable electricity, new substations, and entirely a new power infrastructure. These projects require years to complete. That's why many analysts believe today capital spending isn't temporary. It's beginning of the long infrastructure cycle. Short-term volatility doesn't change the long-term thesis. Market rarely move in a straight line. This will be the correction. There will be a profit-taking, competition, headlines, regulatory concurrent, and a period where the investors cautious AI spending. But those events doesn't automatically change the underlying fundamentals. As long as compute demand continue exceeding the available supply, the companies providing that infrastructure remain in powerful position. The biggest mistake investors can make is focusing only the daily stock prices. The real story is happening under the AI models are becoming more powerful. Enterprises are adopting AI faster. Government are investing in sovereign infrastructure, and data centers continue expanding the worldwide. Every one of those trends increase demand for compute, and every increase in compute demand strengthens the long-term outlook for the companies building the foundation of the artificial intelligence. That's why many analysts believe the continue we are still in the early chapter of the largest technology investment cycle in the history.